bringing it back to where it all started in trading SPY. What's going on, traders? Today is Monday, September 17th, and this morning I took a trade, so as always we're going to analyze it. I was green on the trade, but you'll see over here on the left hand side I was in at 10.57, out at 11.05 and 11.07. I bought 5 contracts initially to open. Why did I buy 5? Well, I've started to increase my position size just because I heard a quote recently that said scared money does not make money. And what this sort of meant to me is, you need to start scaling up, because if you don't have enough confidence behind what you're doing, then you're never going to have a future here. So anyways, 5 contracts this morning on SPY, playing the 290 strike price, contracts expiring Wednesday the 19th. I was playing the calls, and I was in initially at 79 cents on a limit order, out at 87 for 3 contracts initially, taking some off. You'll see it on the chart why that makes sense. And then sort of panicking again, which is becoming a bad habit. Sort of have to break that one, but out again at 84 cents with a market order once it looked like things weren't going to continue in my direction. Let's take a look at the chart and analyze what happened. So I'm trading SPY with my original strategy that I was using way back in school. I say way back when in reality that was just a couple of months ago, but I wasn't making videos at the time, so I don't think I ever explained it to you guys, so I'll do that briefly now. Basically what I look for is, and by no means is this a guarantee, this is just a strategy that works for me. I know how to use it for my own risk tolerance. Anyways, I look for on the 15-minute chart the Bollinger Band, the lower Bollinger Band or upper Bollinger Band to be violated by a candle closing way below it, and I look for it to be on the RSI either way oversold or way overbought. This morning it happened to come down in the oversold direction, coming through and closing way below the 15-minute lower Bollinger Band, and it just so happens if we scroll back in the chart, cursor is staying where that price closed. It lines up exactly right here with the highs of this day. So there's going to be solid support here because there was solid resistance in the past, so I was expecting a bit of a bounce initially anyways, but when it confirmed through the lower Bollinger Band on the 15-minute and the RSI becoming oversold, I knew that this was the solid play that I had played a couple times before and something I was willing to put 5 contracts behind. So let's take a look at the 2-minute for the entries. Alright, so this is the 2-minute chart. You can see SPY had its initial sell-off and then kind of went sideways for a little bit where it consolidated, and then it sold off again, which pushed it through that lower 15-minute Bollinger Band. I began to get interested in calls when we put in this hammer candle here, and I bought in at 79 cents as you saw, again way oversold on the RSI. So I was in at 79 cents and I was expecting a run back up to the 290 area. This was a pretty solid support. Again, it's a whole number support, so it was going to be a nice solid resistance, of course. So we came up and tapped it and sort of struggled to break through, and I was out my initial 3 contracts on this candle where it broke through and poked up through, but when it closed below really weak like that, showing some pretty strong selling there, I began to become skeptical of the trade plan, and this is where I sort of panicked and sold off the other 2 contracts. In hindsight, of course, it kept continuing in the upwards direction, which is where I could have improved my trade plan. If we look at the 5-minute chart over here, we'll zoom in. On the 5-minute chart, it's way less noisy than the 2-minute chart. You can see we had the hammer candle here, and then a solid green candle on pretty solid green volume. If I was looking at this chart, I might not have panicked when we came up to that 290 level and sold off my other 2 contracts, because again, we broke through, came back up, and almost came up for a VWAP kiss. Didn't happen quite all the way, but again, this was a considerable amount of money that was left on the table by taking off those contracts and panicking by looking at the 2-minute chart. One other thing I'd like to mention in today's video is market internals, and this is one thing that I was using in my trading tool belt today when I made this trade. So up top here you'll see I have SPY 15-minute chart with the pivots and the SPY 5-minute chart for spotting setups. Now down on the bottom you may or may not be familiar with some of these things, but over here on the left hand side we have the tick. So this tracks the amount of stocks that are on an uptick versus a downtick in the New York Stock Exchange, basically telling you whether or not the market is moving upwards or downwards. Has a 0 line here, so when it crosses that, means that bullish things are happening. When it crosses it to the downside, bearish things are happening. To its right, we have the volume difference. This is pretty much telling us how many buyers versus sellers there are. If there are more buyers, this is going to be on the green side. on the positive side of the zero line, and these bubbles up here are going to be green. So for example, the New York Stock Exchange at the close had 1.07 to 1 positive volume flowing in, whereas the NASDAQ had negative 3.66 to 1 volume flowing out. On the right hand side, all the way over here, we have the advanced decline line, and this is pretty much the same thing as the tick, but looks a little bit different in a visual representation. And if you look at the time we placed the trade today, look at the crosshairs on the tick, you can see down here that the tick started to put in a higher low and eventually even crossed the zero line, which is why we had that bounce. And I was pretty confident in the trade, so that's why I got in on calls. We had that cross of the zero line, things were looking good. Volume at the time was picking up, headed back in the upwards direction, and the advanced decline line, if we look here, same thing, heading in the upwards direction. Although this one did not cross zero, that could be one reason to suspect weakness in the move. It didn't quite come up all the way to even come close to zero, but again, just another set of tools to have in your tool belt. These are called market internals. I would encourage you to do your own research. I certainly don't bring them up to sort of show off and get very technical. They're just, like I said, another tool to have in the tool belt and can come in handy. So if you learned anything in today's video, I hope you could give it a thumbs up. I would appreciate that. If you have any questions about this stuff down here, about the trade, about the entries, anything like that, let me know in the comments section. And as always, subscribe. That is the #1 way you can let me know that I'm providing value to you as a trader.